A question here from one of our viewers. Even if we sort out state-owned enterprises, reduce corruption across government and avoid downgrades, is the biggest risk facing South Africa macro environment in 2018 the rising yields and inflation expectations in developed nations such as Europe and the US?
I think that's an important point, because even though the SA dynamic has improved, the global environment is shifting. There's a move now from the Fed to raise interest rates and to taper QE. And that change in liquidity dynamic is a risk for South Africa. So it's a valid point, and it's one we have to watch. But I think if you look at the Fed, they are adopting more gradual, more cautious approach to doing this. But it's definitely a risk in 2018.
The question is whether the US business cycle is mature now, and we're going to get a slowdown on unemployment decreasing, whether inflation picks up in the US. That's the big driver, where the inflation sustainably gets above 2%. Then the Fed will be forced to raise interest rates at a quicker pace. The Fed's bullard, in fact, came out just before this broadcast and was a little bit more dovish in terms of the outlook for US rates. So we have to watch US inflation. A sustained pickup above 2% will mean a quicker trajectory. It's very definitely a risk. I think one of the risks that certainly that I'm looking at, and it's a global risk, and I don't know how it gets dealt with or fixed, but just like South Africa's got a massive debt problem, basically the rest of the world has got a huge debt problem. It's getting bigger and bigger in the US, bigger and bigger in Europe, Asia. Japan is if Japan was rated like South Africa was rated, arguably they'd be, I don't know what, junk status minus something, because their debt to GDP ratios are about 4 times what South Africa's are. So debt is a massive, massive challenge that nobody at the moment's got the answer to. And if we have an economic downturn globally, that debt is going to create serious problems as far as asset classes are concerned.
And then just to maybe bring that back to South Africa, when you go into this risk-off environment that Dave is describing, that's when your currency sees very substantial weakness. And of course, we were talking about the US interest rate trajectory as well. If they hike by more than expected, again, substantial currency weakness. And it doesn't take much to turn the sentiment in South Africa, and a sustained period of rand weakness could actually quell quite a lot of this positive Ramaphosa effect that we've actually seen recently. I'd also add to the conversation as well that, when you look at these high yields in the US, I think certainly, the growth is expected in the Eurozone to outperform. The Eurozone economy is expected to do particularly well. And there's concerns that the US dollar will resume a long-term weakening trend. So I think there's many factors that go into the mix. That obviously would then be seen as supportive for the rand against the dollar if the US dollar persists in its decline. But I think, basically the bottom line is that we've had a fairly good period of risk on globally, of global investors buying risky assets, whether they're equities, emerging market assets. And these periods don't last forever. And there is a possibility that as we start to move into a more inflationary environment, we actually see the currency lose some of its shine, and we actually tend to stabilize. So I think the Ramaphosa win, the rally, has come at the right time in terms of global market dynamics. But we can just as easily go back into a risk-off period where the rand can move back to 13 and beyond.